We start the week out bullish. We end the week bullish. We go from about 87% bulls to finishing out the week with 89% bulls. You know what's interesting, though? When you look at the bearish, the stuff that's in the bearish, this is a week where bearish can be considered bullish. I've got two ETFs on this board right now that I'm going to talk about. One I'm going to talk about in length, and the other one I just want to comment on. So I'm going to talk about HYG, which immediately I see is a bullish seasonality. And we see this over the last 10 years between now and the end of August. HYG typically goes up. I'm also going to talk about SDS. Sounds like a disease. SDS has gone down the last 10 years in a row between now and around Labor Day, right? So I've got one bullish pattern that is 10 for 10, and I've got a bearish pattern that's happening today that's 10 for 10. Now let's talk about each here for a moment. First, the bullish pattern. This is HYG. So over the last 10 years, HYG has gone up in value between now and let's call it end of August. If you could see, this ETF back in 2016 made a 3.38% rise over summer. 2017 was a little bit better than break even. 2018, about 0.5%. 2019, a little more than 1/4%. Look at 2020, just like practically everything else. This was a move that jumped 2.71%. Then we saw 0.5% in 2021, 1.37% in 2022, 1% in 2023, 2.71 in 2024, and last year, 1.37%. Now, you might say to yourself, Tom, this looks like this particular pattern, when you show me the percentages over the last 10 years, it looks good till you see the percentages. There's not that much percentage movement. This is like watching grass grow. Two things I'll say to you. Number one, if you trade by watching grass grow, probably one of the most profitable, uneventful ways to trade. And number two, this is not your ordinary ETF, right? HYG is the High Yield Bond ETF. So it's going to move slower because it's bonds, okay? HYG is trading just below 80 coming into today, but this is a 1-week chart that you see on the screen next to you, and I've highlighted a couple of areas. This is last year, all right, where we started off around this time last year, pushing forward to the end of August, a bullish move, and of course, the upcoming, again, no guarantees. I make no guarantees on the program, all right, but I'm a pattern trader. I like to see things that repeat. I like to trade things that repeat over and over again. And so HYG, I'm telling you, is seasonally bullish, has a past history of being seasonally bullish between now and the end of August. All right. So knowing that, let's talk about the other one, SDS. What is SDS? What is SDS and why is it seasonally bearish? All right. SDS is basically the pro shares, all right, ultra short. And this is the ultra short for the S&P 500. So SDS is designed to move twice the opposite direction of the S&P 500's daily return. So basically it means it's going to deliver 2 times the performance of the S&P, but it's going to move in the opposite direction. So if the S&P goes up 1%, SDS typically drops 2%. If the S&P drops 1%, SDS will go up 2%. Okay? Let me show you what that looks like on a chart. So I'm going to pop on over here, and we're going to type in SDS. So if I'm looking at the SDS chart, you can see what it's done here. You can see what it's done here going forward. And just looking at the price only, coming into April. Now, April had its highs in SDS. That makes sense because if you look at SPY, if you look at the S&P 500, it was pulling back in April. This is a mirror image. This is a mirror image of the S&P 500. So when it goes up, the S&P is going down. But when it goes down, like it has been since April of 2026, over the last 3 months, we've seen SDS go from 80 down to the mid 50s. Again, that's a pretty big price drop. But you got to remember, this is the 2 times. This runs at twice the speed of the S&P. And again, if I were to look at SPY and put it up here on the screen, you're going to see the complete opposite. There's the April lows, and there is the highs that we see coming into pretty much today, as we're seeing the S&P looking like it wants to rally back from where it was prior to the open this morning. So when we look at all of this, so we put this all together, once again, STS, why is it bearish? Well, it's bearish because it's basically bullish the overall market. So if I see a seasonality chart and I see seasonality history and I see something that wants to go down, like this particular index, it confirms to me that the seasonality, all right, the seasonality we're looking at, it confirms that the SPY is seasonally bullish. Because if SDS is seasonally bearish and SDS is the opposite of SPY, then it's telling me what I've been telling you for the last several streams we've done, that we see the S&P 500 going higher. I expect this summer, as we go into this summer, with the exception of this constant on again, off again that's happening in Iran, then I expect to see new all-time highs in the S&P, as well as the Dow Jones Industrial Average and the QQQ.